Hello everybody, welcome to my slidecast. My name is Yoon. Today I would like to show you some financial analysis and stock trend of Coca-Cola Corporation, one of the most biggest beverage in the world. My presentation is divided into activity ratio, liquidity analysis, long-term debt and solvency analysis, profitability analysis, and stock trend forecast. Let's start to looking at the short-term activity ratio graph. From 2011 to 2012, there was decrease in inventory and receivable turnover, while increase in working capital and payable turnover, but all of the numbers still higher than benchmark. It indicates the well manager of coal and about warehouse, debtors, trade payable, and capital. Well, as you can see on the long-term activity ratio graph, there was a crash of total assets and fixed assets during 2 years. Therefore, this should improve in the future to make sure better than their competitive control. Move to the next slide, liquidity analysis. According to the graph, current ratio and cash ratio form unimportantly. The reason of this problem is the financial crisis over 5 years, which caused a lot of negative impact on American economy in particular and the economy of the world in general. Look at the risk ratio. You can see that in advance, $8 of current liability can be adapted from 0.38 to $1.09 of current assets, cash and marketable, and cash from operation. The research shows that companies have great ability to pay the current liabilities. Let's move on the long-term debt and solvency ratio. This slide indicates the former trend of long-term debt and solvency ratio of coal during the period of times. Coal is not depend too much on debt. Company, however, should reduce the time interest earning because a high ratio deal with the company had undesirable lack of debt or company have to pay down too much debt with earning that could be used for other projects. Let's move on the long-term debt and solvency ratio. This slide indicates the former trend of long-term debt and solvency ratio of coal during the period of times. Coal is not depend too much on debt. Company, however, should reduce the time interest earning because a high ratio deal with the company had undesirable lack of debt or company have to pay down too much debt with earning that could be used for other projects. Next, I would like to take a look at profitability analysis. It is easy to recognize that all operations moved slightly from 2011 and 2012 and grew over 10%. They were still good, although some ratios, such as gross profit margin, return on equity, did not achieve the result and meant the company is good at generating profit. Moving on to the next part, I will introduce you the trend of stock in 2011 and forecast of Coca-Cola share in the future, also the main part of my slidecast. So, with many analysts above, you can understand why the price of coal stock zoomed in 2012. It got a peak at $70 per share in October. Share onward had a high price, over $60 per share. The volume of shares fluctuated during this year. The highest volume is over 40,000 shares per day, and the lowest is 5,000 per day. Nowadays, the price of coal share has gone down under $45 per share because of economic, the marketing of coal and so on. Thanks to the information of money.cnn.com, it gives the stock price forecast of coal in next 12 months. The biggest is $52 per stock when the lowest is $40 $1,000 per stock is for slightly than 2012. Well, that brings us to the end of my slidecast. I would like to thank you for your attention and interest. If anyone has a question, please comment below and I will be pleased to answer later. Thank you again.